Good morning, traders. Welcome to the TMT Stock Market Strategy video for Wednesday, January 18th. All right, well, we had some weakness in the overnight session, and that's Prime Minister May making comments on Brexit. We also had some weakness, some follow-through on a few comments that Donald Trump had made over the weekend, the long weekend, and we really didn't go anywhere. We opened, we gapped down. We've kind of stayed at the lows pretty much, and we just kind of trade in a range, but still lower on the day. But indexes are still not moving. They're not going anywhere, and we want to start looking for rotation money coming out of different sectors and going into other sectors while you're waiting for the indexes to move. Otherwise, you're just going to sit here and do not much of anything, and I'll get that for you in a moment. Dollar index, you can see the UUP caught the 25.90 here. Now, this is getting interesting, right? If we start to dramatically pull back, remember, it's going to affect a lot of asset classes in a big way. And we don't know if this is just going to be a pullback or is this going to be started something bigger. So we don't know that yet. We did get a gap down. What I'm looking for possibly, and what could possibly happen, is a possible head and shoulders pattern that could be developing. And again, this needs to, the right shoulder needs to start to develop here in this way, and then you'll have that little gap area, slanted neckline. Well, actually, excuse me, it would be down here because that's the gap lower, and then a breakdown below 25.90, which coincides nicely with this uptrend channel. Now, this is just a what if. It's a big this is just a big question mark. That's all it is. So we don't have we don't really know what's going on here at the moment, but it's something to keep an eye on. So this is something I'll be looking for in the next coming days. Next, let's take a look at our bonds, the TLT, the 20-year, gapped up. And you can see it gapped up from Friday's sell-off, and we're just still here taking out, looking to take out the swing high. We need to really get this out. Once we could take out the swing high on a closing basis, I do think that 122 and even the 120, call it 120, 127. That'll be the lower end of the gap area, and eventually would fill that gap if, again, we could take out the swing high. We could continue making progress here, but this is still working here, so I'm not really too sure if it is going to do that. Remember, commitment to trader reports have the traders, the smart money traders, extremely long for the first time in a very long time. So it could get up there at least to fill the gap, and then we would look for lower prices. Again, I do think that rates have made a generational low in July of 2016. All right, next we're going to have GLD. You can see very impressive gap up here that we had. We're back into this area. And again, guys, I still think this is just a retracement rally. We need to see a little bit more evidence, a little bit more backing and fill before I would call for any more upside, or at least an upside resolution that we're going to continue moving higher and making new highs. I just doesn't look like that's happening at the moment. But again, look, if we had this little area here, GLD is very difficult to day trade, as well as even gold. It's more of a buy and hold that I feel, because once you make a move during the day, right around 1:30 when gold futures closes, the move is over. It's done. It really doesn't do much. It's a little bit harder to trade. GDX took an impressive gap outside of this new horizontal triangle, as you can see here. You can see what it does. It does this quite often, and if you learn how to trade the instrument that you're trading, you can really be successful trading it. But again, it's the same thing. Consolidation, right? Move up. Consolidation, move down. Consolidation, move down. And that's how this works. So just learn how to trade these instruments that you're looking at. But again, impressive move. Here is our premium video subscribers to show you a little sample. Pretty amazing stuff here, the way this works. All right, next, let's take a look at spiders. And you can see here, we didn't do anything today. I mean, yes, we gapped down a little bit. We moved higher. We took back some of the losses, but you could see we are clearly within a range here at the moment. Same thing. We're doing this, and this is actually getting too frequently. You could see range, 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 range. Half of the year we were in ranges other than a 2-week run. I mean, it's just insane, guys, the way this is happening. However, what needs to be done now is, if these ranges continue, and it just can, and you know, you're indexing. You need to find what's going on under the hood, so to speak. Here is the bank stocks. You can see Citibank. Here's Goldman Sachs. Goldman Sachs got walloped, right? You could see Wells Fargo, same thing. But look what, if you look at it, all of the charts, they have these huge extensions. All right, here, let's see, J.P. Morgan, same thing. Okay, big consolidations for like a good 2 weeks. All right, so what does that tell you? Well, if money's starting to break down, and now the banks are starting to falter, and then they're going to give back a good portion of this move, and we don't know that. You're going to have to say, well, I think the new highs rally is going to be diminished at least a little bit in the short term, and get some sort of a pullback in some of these bank stocks. So what would you do? Let's take a look at some of the bank stocks for some shorting opportunities during the trading day, right? If the spiders aren't doing it, you can see clearly there's nothing going on here. I mean, if you're just looking to trade this index, it's just it's very boring of late, and it's sad the way these markets have been working lately. However, I do think that Mr. Trump will provide extreme volatility coming in 2017, and would create a very good opportunity for us traders. Here's the IWM. If you recall, yesterday I put out a video only on the IWM, and I strongly urge you to watch this IWM. We did break down that 135 level. Again, one day does not make a trend or a breakout or breakdown for that matter. Let's wait and see. We get a couple more days below this average. Once we get below this TMT proprietary average, then I think the next step is going to be the 38% retracement, and then ultimately this uptrend channel here, uptrend line, excuse me. Okay, I think you break the 135. We talked about this many times in the video. You could see here we have this the thin zone to your left of the charts. Okay, once that breaks, it just flushes all the way back down, and this will be your next area. You're really 124 would be your bigger target, taking back pretty much most of the Trump rally in the Russell 2000. Okay, but right now we're still premature, still early, and Russell was the weakest of the bunch. So let's see if Russell continues to move lower, takes out the Thursday low. And once we take out this Thursday low, I think we should be down below this channel. So if you are looking to short an index, the Russell 2000 will be a great candidate in the next couple of days. And lastly is the Qs. Qs held up rather well. Remember, Netflix reports today. Keep an eye on Netflix, and keep an eye on those earning calendars too, guys, because you know, you don't want to be stuck caught holding a position, and the next thing you know, you forgot, and then earnings comes out and it goes against you. So could be very damaging to your account. All right, have a great day, everybody. We'll see you tomorrow. Take care.